Hello, everybody. This is the Physics of Bitcoin show. Today is 7/29, 2026. This is episode number 51. And I am here, as usual, with Stephen Perenov, the director of the Scientific Bitcoin Institute, and he's the vice director. Um, you can see, again, I am in the headquarters. We have a nice flag over there with our symbol, with our logo. Um, and so we are doing a lot of progress. I want to give you a little bit of an update. I'm still working on the dashboard. It's going to be a very, very nice resource. Right now, we have at least 20 different indicators. We're planning to have probably close to 100 at a certain point. It's not just the power law, but different way of looking at the data, analyzing. The main idea, though, different from other products similar to this one, is that we are focusing on science. We are trying to say, this is a validated, scientifically validated method of analyzing data. These are the things that we can learn. These are the limitations. Basically, if you go to each indicator, you see in the chart, many charts online, in particular TradingView, for example, it doesn't give you the chance of looking at log, and we know that log is the best way to look at Bitcoin data. So it has actually a tab where you can look, you can have a log linear, and log. And then there are tabs where we explain, if you want to go in depth, the methodology, right? What method we use, what are the limitations, maybe even reference papers that you can read, where you can learn about these kind of things, maybe even a textbook if you want to. There will be links where you can go, and at a certain point we will give access even as we work on it, because we want to make a good product, but it's going to be something that we improve with time. Like, for example, right now we are creating classes that cover all these topics. So if you want to know, for example, what a Fourier transform, because we use a Fourier transform to derive maybe some spectral information about Bitcoin, or the type of mathematical procedure, there will be a little video where you can learn that, right? Because part of what the Institute is going to do is to educate people about science in general, but science that is relevant in understanding Bitcoin. And so we will have these lectures, so you can link, you can click and get some information on it, maybe even some exercise. Little by little is going to evolve in something that has a lot of value. And all these are actionable charts. They are going to be updated mostly daily, because I think Bitcoin, it's good enough to look at daily data. But there will be information about, we like these charts, right, where we show that everything goes to zero relatively to Bitcoin. So there will be a chart, Bitcoin versus gold, Bitcoin versus silver, real estate, oil, many different commodities. So a lot of ideas. And if you have ideas, and we will interact with the public, it's going to be like a survey. So you want us to implement a particular idea, we will look at it and try to have an indicator about that. So it's a lot of work. When we have something that is nice, we will start to give access to people. The main way that you're going to have access will be basically becoming a member of the institute. We're going to even have like a nice merch like this, like a hat with the symbol. So if you want to go to conferences, say, hey, I am a member of a Scientific Bitcoin Institute, because it's a non-profit, so you're supporting us. By the way, I don't know if it works in other country, but if you are in the United States, you can deduct this as a donation from your taxes, whatever you contribute to us. I'm sure that maybe works like that in other countries. We are an international organization, but we are incorporated in the US. And so there will be a membership program where you donate monthly. These are all donations. We're not selling anything. It's just a way of supporting our activities. So relatively inexpensive donations like 20, 40, maybe $60 a month, and you will have access to all this information. There'll be even a news session, with information. So it will be a combination of reports that you can download, indicators that you can interact with, and classes. There will be entire classes, from introductory classes to more advanced classes to things that if you want to go deeper and maybe reproduce some of our results, you can. We can even teach you how to do it, the prompts you can use. Basically, you see if you want to explore things using AI. So, yeah, we have a lot of activities. We are even thinking to have a conference soon, like a scientific Bitcoin conference instead of the usual cheerleading conferences, where actually we invite scholars that will present their work or their studies on Bitcoin. This will be held in Lugano around October. So we are working on this. We will announce when we have something more concrete going on. Eventually, this conference will develop in something where, if you have done some research on Bitcoin, you can present. Right now, it's mostly invited speakers, but eventually it will be like an open conference where anybody that, not anybody, there will be some committee that will select the applications, like it's usually done in conferences of this type. But yeah, we will start this year with invited speakers. So this is kind of an update on all the things we are doing right now. There are a lot of activities, a lot of progress. Yeah, this is mostly what I wanted to update you with. Stephen, do you have any comments or any questions about some of the things I explained?
No, I just want to add that we're working hard to expand the offerings in terms of the indicators on the dashboard, and so I think the progress of that is coming along nicely, and I expect that to continue to happen in the next few weeks.
And when I have something more polish, I will show you around. But for example, there is a sections that covers some of Stephen work on log periodicity, where and it's going to be very interactive, because mostly to show the process, because we are interested not on the final product itself, but how you think about these things. Like, for example, Stephen often talks about different modes, different frequencies. So you will be able to add them. Say, okay, what if I just add the main oscillations, right? Just one single mode. And then what if I add harmonics? And you can see how it looks like. So it's a learning experience where you can see and you can interact with the chart like that. So it will be really. And then you can have projections towards the future, see where things go. Yeah, it's we are interested in not just in making things useful, but also teaching people how to think about these kind of things. Good. Yeah, so this is my report on our work, and Stephen is going to show us more of research. So go ahead, Stephen.
Yes. So what I'm going to do this week is revisit the geometry, the dynamic geometry topic. It was a rather difficult topic. We addressed it last week, and I think as a bit of a mea culpa, I kind of just dived into that, and I want to give you the background as to why we do this, because it's, I think, quite important to understand in the context of what Bitcoin really is and why it has this dynamical geometry. So I've titled this week's presentation, Dynamical Geometry, Why? And I've streamlined some of the charts. I'm going to revisit some of those that we showed last week, but I want to place them in this broader context. So the agenda is why dynamical geometry. We are first and foremost dealing with a network. Price is one expression of that network. And in fact, it's a meta network. And then I'll talk about the particular technique that we use to explore the geometry, which is an embedding technique. So why that? And I've got now a 4-article series up on Substack. I just put the 4th article up that has diagnostics and surrogate testing and out of sample testing. I just put that up earlier this week. So the first article or phase of this is to look at the embedding and then kind of get first, and it's a little bit of an art because you have to pick a state space to work in. And that state space that you work in, you could start in 3 dimensions or you could go to 10. So you've got to figure out something that's kind of a compromise, that's going to show you some structure, but that's not going to be overly complex. And so mostly we work in 6 dimensions, but we do look at some other dimensionality in order to see, how that's behaving. And the idea is that you find embedded structure, it's called an attractor, inside of that larger dimensionality state space. It turns out to be about 4 dimensions. So the idea is that you've got this low dimensional or lower dimensional structure. Dissipative means that it tends to return to some core behavior, which we know the core behavior is the power law in terms of the price trajectory, but there's also the other core behavior in the network. And the second one was about looking at some of the measures of how the geometry changes with time, how it stretches, how it curves, how it deforms. And when we do that, we get some indication, it needs some further investigation, but there's some indication that when you have extreme stretch or extreme curvature or extreme deformation or some combination of those, that you may have some forecastability for future price over a horizon of, say, 6 months, 12 months kind of horizon. And then the third one article is exploring the vector field and the flow field of the structure of how that's moving in time. This is all a dynamical process or set of processes. And if you have a dominant dimension, which is the trajectory that you're following with time through this state space, then around it, there's some sort of 5D structure. And it's not like a big cloud because we've already shown that it's sort of confined in mostly this sort of 4D space. And so you have this kind of 5D tube, but then you've really got structure within that. And it turns out to be a 2D membrane. So we show how we demonstrate that. And then having developed to that point, we then need to go back and sanity check it. And we do that with diagnostics and with surrogate testing and with out of sample testing. And then I'll close with interpretation and hierarchy. So I think the important thing here is not that you understand every little detail of what I'm presenting, but that you get this bigger picture that what we're talking about is a network, a meta network that has dynamical geometry. So last week in Physics of Bitcoin, number 50, the feedback was, what the heck was he saying and why was he saying it? And so that's what I want to kind of go back and cover that. And hopefully we'll do that this week. Last week, it probably came across as geometry something, 60, but what does it all mean? So let's start with the idea that, first of all, and the understanding, and I think most people that attend this regularly have a general understanding of this, that Bitcoin is a meta network. And depending on how you count, you can count 12 or 13 networks or maybe some other number. This graph has 13 networks on it. There's a little panel up in the upper right that says 12 networks because it combined the macro and the financial when I produced this in ChatGPT, and I didn't really repair that piece. But the important thing is it's classified into what's endogenous, what's exogenous, and what's hybrid. So the endogenous is native to Bitcoin. Those are the green boxes. And we see about 5 of those boxes. We've got the hybrid, which are the interfaces. And then we've got the traditional world, which are your boxes on the top in red, ranging from the energy and semiconductor network, the global macro network, the traditional financial system. But then in between Bitcoin and the traditional financial system, we've got the crypto exchanges, the Bitcoin exchanges, the liquidity. You've got derivatives, you've got ETFs, you've got institutions, you've got treasury companies, you've got the Lightning payment network and other second layers and side layers. You've got the liquidity in those channels. You've got user adoption network, the people that create wallets, the merchants, the developers, and so forth. And those we consider as hybrid. And then there are a lot of feedback loops in these networks, and they work to sometimes disrupt, but in general to stabilize what's happening over the longer term. And so if you go to the very bottom, you see this orange box. As a result of all this, what we see is we've got emergent properties of a power law nature, power law growth. And that includes log periodicity, which is another aspect really of the power law. And then what I'm showing today is this low dimensional geometry. And of course, we have multiple power laws. It's not just price, right? It's the adoption is a power law, the hashing or the difficulty, which is directly related to hashing, that's a power law. And of course, Metcalfe's law about the value of networks going roughly as the square of the adoption. So when you have a network, you have geometry. And dynamics is how the geometry evolves. So this is the backdrop for everything. And at the basis, we have the protocol first, then we get consensus, then we build a security network. And it's really only once that is in place that you can have something that works for money. Money needs security as a predicate, as a basis. And this is why we did not see price develop until Bitcoin was a year and a half old, right? We saw hashing, we saw hash rate rise, difficulty was slow to rise, but it did start to rise before the end of the first year. And of course, we saw adoption start to get onto this power law curve that's roughly a cube of age. But price really did not get expressed until we had the first exchange a year and a half in. So the idea is that this meta network with these dozen components to it, or constituent networks, can be represented to some degree in a collapse to a low dimensional dynamical manifold. And price is one projection of all of this. And that we've got all of these self-reinforcing feedback loops that promote robustness, the health of the network, and the long-term scaling. And the fact that Bitcoin can survive the bust and the boom cycles and come out of, temporary exponential and super exponential behavior, and then a crash with negative exponential behavior, but always revert back to long-term, very strong power law growth. So it's a network, and then it's the price. The deepest physical object is not the price, it's the meta network, and price is an emergent observable. So we're observing price in order to understand the dynamic geometry of the network. Topology and geometry is a natural basis. So once you have that, then you can ask this question about, is there a lower dimensional manifold? And we can explore that. And just reminding you the multiple power laws of adoption, hash rate, Metcalfe's law, and of course the price. And in fact, price versus hash rate is roughly a power law. And log periodicity is really another form. It's like the imaginary form if something has a real plus imaginary part in a complex number. And the exponent for price, beta, is related to the log periodic frequency, omega, or the spacing parameter, lambda, which is like a wavelength in log time. Okay, so that's the predicate. And what we do is we use embedding to explore the space. So what does embedding do? This little illustration shows a comb, and it's got 6 little tines, and they're equally spaced. And the first thing we do is we put everything in log time, because we're dealing with something that behaves like a power law and that has scale invariance. And it has continuous scale invariance. And we know with the log periodicity that is discrete scale invariance. So we want to try and do everything that we can do in log time. So this is a curve of, the blue line represents price as a function of log time with this spacing. And, I examined different options for the spacing on the comb. We take almost 6,000 prices, and then we project them into equally spaced log time. So 5,800 daily prices, but then we interpolate that onto a log time grid with 3,000 times that are logarithmic times. And then we slide this comb over those. And the comb has a spacing parameter, tau, which is a certain number of logarithmic intervals. And it turns out to be 50 is a good choice. You're trying to do the intermediate structure. You're not trying to be too short term, but if you go too long term, you kind of miss what's going on as well. And we're always looking backwards in time because we don't want to be using forward data, because we're trying to see, what we can project forward in time. So we look backward by 1 times the time delay, 2 times the delay, 3 times, 4 times, and 5 times if we're working in a 6-dimensional space. If you were working in a 4-dimensional space, you'd cut off 2 of those times, and you could make the same sort of exploration and see how it compares. Once you have these 6 delayed values, you've created a state space, and you step the comb forward 1 unit of log time. And so once you do that, you've got 6 numbers from the original log time, and then you step forward by 1, you've got 6 more numbers, right? And so you're in this 6-dimensional space, and you're moving along a trajectory, and then you step it forward again, and you take the next step, and so forth. So you end up with a trajectory in this 6-dimensional space. And by doing this, we can start to uncover properties that we don't see in the original 1-dimensional price series on daily prices. First, we've put it into log time, which helps already. But more importantly, by using this embedding, we can find, are there recurring trajectories? Are there loops? What's the dimensionality within that 6-dimensional state space? Is it a big cloud that's random, or does it occupy some particular volume? Do we have phases of compression or stretching and contraction and curvature, stress and strain? What's the local direction of the flow? Is there a cross-sectional geometry, a transverse cross-sectional geometry, transverse to the principal trajectory? What does that look like? And then we can do testing against that, with diagnostics and surrogates to see how well it stands up when you randomize data with respect to certain variables. Okay, so we have these 4 articles. The first one, Geometry 1. Here's the methodology. You take the daily price, you convert to log of age. So you're now in this sort of U space of time. And when you do a power law regression, and you get your residuals by subtracting out the best fit ordinary least squares power law, and you put this all onto the uniform log time grid, 3,000 points. And then you go through the embedding phase. That gives you the state space. And then you can do dynamical analysis on that. And there are a bunch of different techniques, and you'll see some of those as we go through. Now, that's for the first order residuals. These R of t The residuals of time that we then convert onto this uniform log time grid become R of U, where U is log age. But we also look at the second order residuals where we subtract the discrete scale invariance, which is the log periodicity and just the fundamental mode. We're just taking out the fundamental mode. And so then you subtract that from your first order residuals, you get second order residuals. We call those Q. And this little inset shows what the fundamental mode looks like. And you can see this is actually a log linear plot. So you can see that the peaks and troughs are stretching out in time. The angular frequency is 8.8. It corresponds to a lambda value of a little over 2, around 2.04. And also there's decay in the amplitude, and we fit that by something like an inverse reciprocal. And the last trough was in the middle of 2023, and the peak is near the end of 2029. If it continues to maintain that same frequency and doesn't have a lot of phase shift. So that's what we use to remove the discrete scale invariance. So one test you can do is called the Kaplan-York dimensionality. You've got this 6-dimensional space. You identify these exponents basically and order them as to which direction is strongest and which is weakest. And are they positive? Are they diverging, or are they contracting? And so the first two are diverging and the next 4 are contracting. And then the trick is to estimate the dimensionality is you start with the strongest one, you add the next one, and you add the next one, and you keep adding until you get to 0. And that estimates the dimensionality. And so we end up as about 4, because you can see that the third and fourth one, and they're denoted by these capital lambdas, offset the first two. And overall, it's strongly negative, and that means it's a dissipative system. It's kind of reverting back to form and reverting back to its core behavior. So that's an estimate of the attractor. And here, formally, it's called a reconstructed attractor. It's not as if this is the true attractor, but it's an approximation to it as a result of going through this methodology. And this is a projection in 3 dimensions. So it's obviously not a 4th dimensional display, but I'm looking at it from 2 different aspect ratios. And so you get some sense of what it looks like, and you see that it does not fill the space. It's relatively confined, and it sort of has this travel to it. And in fact, there are orange and blue dots that show the starting point and the ending point, which are not all that far separated. But obviously a lot of, filling of space, but not nearly what you have if you were filling up 6 dimensions. Okay, and I'm just giving highlights of basically a couple of slides for the most part from each of these articles to not overwhelm you. But in the second one, we looked at stretch and curve. And here we've got stretch on the y-axis and curve on the x-axis. They're both in log terms, and these dashed lines are at the 90% level. So for example, on the right-hand side, that's only 10% of the high curvature values. And then looking on the y-axis on the top, that's just 10% of the high stretch values. And then they're color-coded, and they're color-coded by the 1-year future change in the first order residual, which basically is excess return over and above the power law. So for example, if you have a 0.5, 365-day forward residual change, that's a factor of 3. And that's extra return over and above the power law trend. And most of the points, all of these are on a grid, and there are a bunch of numbers inside all of these grid cells. And most of the data is sitting towards the center where the numbers are high. They're up in the 30s and higher. And then we have, the behavior out towards the edges. And what we see is that the reddish colors tend to be where you have high stretch and high curvature. And you don't have as many points per cell in some of those, although a few of them do have fairly high number of points. But there's a suggestion here that if you can identify regions of high curvature and high stretch, then you've got potentially some forecastability for the future. And we have to do more exploration around that to see if that holds up. But I did also look at deformation, and it was somewhat consistent with the last slide. And it's a more general deformation, how much the distance between points spreads out or contracts. And again, we're looking at just the top 10%, and then we're plotting how much the median and the mean change going forward from one of those events. And we find that there's potential outperformance of about 0.14 to 0.18 in the log 10 residual. And that corresponds to a 40 to 50% kind of excess return. Again, that's above the power law because this is in the residual 1 year out. Okay, and then in the third article, we looked at the vector field. I won't go through all the details here, but on the left, we have the first order residual. And on the right, we have the second order residual that has the log periodicity removed. So on the left, just the power law has been removed. And what we find is these are principal components. So they're the kind of two strongest components of everything that's going on. And then you draw vectors for the dynamic direction of these things. You see this kind of loop area, loop space on the left-hand side, and it more or less goes away. There are little hints of it, but it pretty much goes away once you remove the log periodicity. So it seems associated with the fundamental mode of the log periodicity. And those first two modes are explaining already 80% of the total variance. On the right-hand side, it's a little bit less, but it's still high. It's, over 60%, 62% of the overall variance. The flow is a little more disordered on the second side. But actually the next one really puts contour lines around the flow, so you get a better look at the structure. And it does seem rather systemic or systematic. Now you will notice that on the left-hand side, it's running clockwise flow. And on the right-hand side, it's running counterclockwise, but that's actually arbitrary. The direction of the flow just depends on the way you've defined things. You could flip the components and you would see the flow in the other direction. But the important thing is that you seem to have persistent circular flow, even though the speed is varying rather greatly. You see that more so with the second order residuals on the right, that there's a variation in the speed, which is color coded by as much as a factor of 8 as you go up into the yellow zone. And those tend to be on the outer reaches, not surprisingly. There's no evidence that we're getting an inward spiral. We don't see that in either case. But we do see that the tangential velocity relative to the radial velocity is higher in the case of the second order residuals, the Q residuals there. And that reaches, in terms of absolute magnitude, over 2. And then we can look at this tube width. Once you take out the sort of principal trajectory, you have 5 transverse components, and then you can measure the effective dimensionality of those. And that's what we do with the 2 charts at the top here. Again, the left side is R, which has the first order residuals. The right side is Q, which has the second residuals. And you see in both cases, it's pretty close to 2. It does jump around a bit, but on average, the median is just below 2 on the left-hand side, and it's 2.0 on the right-hand side. And then the second row, you see how much is in the principal component in the blue line, what fraction of the variance is explained, and then how much is in the first two components. And the first two components dominate and explain close to 90% in each case. So the overall picture that we get from the first three articles is that we've got transverse dimension of about 2, and we had an overall dimensionality of about 4. That should be larger than the transverse width plus the one dominant trajectory component, and it is. And the interpretation is roughly 4D dynamics with a roughly 2D transverse cross-section. Exogenous innovations means influences from the outside world impacting the observed trajectory, but that it remains confined with a relatively compact membrane-like attractor surrounded by a log periodic or DSI oscillatory backbone and embedded within the long-term power law. So the working hypothesis is that Bitcoin exhibits a low-dimensional, dissipative, attractor-like structure and reconstructed log-time state space. So let's break that down. We build a state space in 6 dimensions. We do everything in log time. Reconstructed just means we don't know what the true state space is, but we're building, some model of it. Attractor-like means that things have this stability, right? It just doesn't fill the whole room. It's not like a strange attractor where things are very, very tight, but it's got a general compact dimensionality, and with this transverse cross section. And the anisotropic means that the two dimensions of the transverse cross section are not the same, particularly for the first order residual. One of them is clearly dominant over the other one. For the second order residual, they're closer in size. This gets into the diagnostics. And basically, we're comparing what the log periodic space, think of a plane, looks like relative to this roughly 2-dimensional membrane, very close to 2-dimensional membrane that we found. Because the log periodicity has really got a sine component and a cosine component. So that's 2 dimensions, right? And how does that fit against the DSI? Well, with 2 different tests, it fits, 99% or 96%. The first one is the first principal component squaring, and how well does that overlap with the principal component of the log periodicity? Very high. And this is for the R of U that does not have it removed yet. And then the rank 2 just means a plane overlap. And again, it's very high, 96%. And then the third row says 39% of the variance is explained by the fundamental omega, the fundamental mode. There's very little in a direct harmonic. I did not test for nonlinear harmonics here. And then when you move to the cube, you've removed DSI, and so those numbers drop dramatically, and you only are at 1.65%, which is basically like random behavior. So, and that you can fit frequencies and you get very close. They're 8.9 and 8.7 for the fundamental mode, close to what we, have originally found for DSI of 8.8. So the conclusion is that the dominant transverse principal component in the first order residuals is associated with the fitted DSI fundamental. So this is another way of supporting the reality of log periodicity. And if you take it out, the strength of it, which is called an eigenvalue, falls by 2/3. And then we do surrogate testing. And there are 3 different tests, and there's a histogram, and there are 500 realizations for each. And the first row is the first order residuals, the R's. The second row is the second order residuals, the Q's. Let's look at the second row first, the red ones. And there, the probability of matching the observed in all cases is very low, less than 2%. It's 0.016, 0.008, 0.004. The observed is just the black bar that's at the left, which is close to 2. And you see that there's almost no overlap with the histogram of all the random trials. Now, in the first row, with the first order residuals, it's not as strong. With the variance matching, it's less than 1%, and it's outside of the histogram, but there's some overlap at the sort of 10% level. And you like to see things at 0.05 or less, and we don't see that. And the reason is that for test A and test B, both of those actually include within them the fundamental mode of DSI. They include the omega equals 8.8 periodicity, and then they randomize phases around that. And as a result, they're retaining that structure. And so they don't distinguish as clearly. But what we can overall say is that after removing DSI, the second order residuals are unlikely to be explained by autocorrelation or skewness or heavy tails or unusual amplitudes. And so that suggests that there may be some ability to have that you're finding state information or regime information or possibly even forecast confidence. I did do some out of sample testing, and it supported the dimensionality idea, but it did not provide forecastability because we found that this two-dimensional structure, which you can think of kind of like an elongated ellipsoidal shape, like a ellipsoidal plane, that it's rotating, and it has significant rotation. It rotates through, more than 90 degrees. And so that kind of destroys some of the forecastability that you would have. But overall, our interpretation is this approximately two-dimensional transverse membrane dominated by one principal mode for the first order. And it retains the same dimensionality through time, but it twists within the higher dimensional reconstructed state space. And the evidence is suggested for DSI, for the log periodicity. It might even explain those two principal components, which can either be cosine and sine terms or cosine plus a phase term. And also there's more global compression in the first order residuals. Removing the log periodicity substantially reduces the dominance of the leading principal components. And the second order transverse dimension remains significant, even after removing DSI. So you don't lose that two-dimensional membrane structure. So in summary, in terms of the motivation of this, you think back to the hierarchy that builds Bitcoin. You start with physics, with energy, with computers, with information. And then you layer onto that the protocol and the software. And that provides the basis for game theoretical equilibrium and solving the double spending problem and arriving at consensus. And then you develop Bitcoin networks with miners and nodes and users and ownership. And then later comes financial infrastructure and exchanges, and more recently derivatives and ETFs, and those things give you price discovery. So price is an expression of this dynamical geometry, the state trajectory of this coupled meta network that sits in a global economic environment that's impacting it with liquidity and regulation and all the macroeconomic variables. And so price is an observable through which we're trying to infer the hidden dynamics. Okay, and I'll close with that. As always, if you haven't read Giovanni's book, you should do it. And our paper has been published on nonlinear science, and you can get access to it on Zenodo, which is the CERN preprint.
Okay. It was a great presentation. And again, I invite everybody to watch this presentation a couple of times because it's a different kind of presentations that we do. It's not the usual, oh, price goes up because it went up this time of year. Um, and there are elections, or there is midterms, or whatever. But to me, it's always arbitrary because if there is a connection between these things, is you don't know. You can assume it, but it's not proven. People don't do the effort. They just listen, and maybe some people like that kind of stuff. It's not what we do. So what we do is actually going deeper and using these more sophisticated tools, because to us math comes first, right? We have the beauty of Bitcoin. It has all this information, all these regularities, and it should be the other way around. You see the regularities, and then you're trying to explain maybe where they come from. It should not be, oh, because we think and this and this other is happening, then this should influence the price. Unless you demonstrate that is the case, it's just a bunch of words, right? Um, but it takes time. We also, one of the purpose of a show is to keep a record of our discoveries. Kind of almost like a report, like a diary of our research. Eventually, this research will go into papers. We will publish them. We have probably 5, 6, 7 papers that we could write as we go along. But it's a long process, right? It took us almost years to publish the first paper and to establish a pattern. We will hopefully will not take so long for the other ones, but eventually, again, the website will have a research page where we explain all the things we've done so far, and there will be updates, and maybe again ways of going deeper. So where if you want to understand some of the topics, you can go. Nowadays, um, you can learn almost everything online. You can actually get yourself a university education if you wanted to. So the institute will try to do that for what concern the topics they are interesting to us. So if one wants, can go into the rabbit hole and explore these things. Um, but like always, ask questions if there are things that maybe are not super clear. But the main goal, from what I understood, because I was following Stephen's work as long as anybody else, because some of the things I'm familiar with, other things are things that he's just discovering now and sharing with me. I do understand the approach because these are things that are somehow familiar, because we have similar training, similar understanding about these tools. But it's very important. Basically, we are showing the main theme, like always, is that Bitcoin has, I call them regularity, has a lot of regularities. And, we have already established the power law is not a fluke, it's not a trick, it's a real behavior, fundamental behavior. But when you take out that main signal, you see that there is still regularities to be explained. It's not just a bunch of random dots. Um, and these irregularities, we are trying to go deeper and trying to see what they mean, because there is a big debate, about the Fourier cycle. Is it real? Is not real? And we are coming closer to the approach where it kind of, it's a ghost in the sense that the real periodicity seems to be this kind of stretch periodicity that we call the discrete scaling variance. So when Stephen mentioned the SI, this is what he's talking about, and it means basically we see these oscillations being repeated over and over at different scales. So the first one took 2 years, then another one took, it's almost like doubling every time, right? Um, so is that correct, Stephen? These are
Yes,
So,
Yeah, I mean, the first one was closer to 2.5 years, and the
yeah,
next one was closer to 5 years. But yeah,
5 years, and then
yeah,
they continue to grow. It's the same pattern that is being repeated, but because it involves logs, if you plot it in a log graph, they look the same. It looks like a sine waves. If you plot it in a log chart, like where log is the log of time. Same thing with the power law, where this strange behavior, this curve, right? It looks like a J linearly. It's actually a straight line if you plot it in the right way. And these oscillations, they became longer and longer. They look like regular oscillations if you plot them in a log graph. That is what is similar between the two. Um, and so that is the real oscillation that seems to be confirmed from many different angles. And it's the idea that is a powerful idea if it is confirmed, and this is why we are trying to approach it from many different angles, is that it's something intrinsic to the network itself, is how the network behaves. It is an intrinsic property. And then, even when you include this oscillation, there is still some behavior to be explained, that is what cannot be explained by the model. That is really relatively little because remember, the power law itself explains 97% of Bitcoin behavior. People forget about that, right? That straight line is really the essence of Bitcoin. It's 97% of its behaviors. It's difficult to wrap your head around that because most people see the cycle, see the oscillation, see the 50% changes in price when it crashes, and they forget that really it's a straight line in a log graph. It's that simple. But we psychologically the cycles have an impact. This is why we go a little bit deeper and try to understand them. And there are different components. It's not 4 years. It's a little bit more complicated than that. And even when you include these log periodic oscillations, there is still some left stuff that is FOMO, that is maybe the influence of external cycles, like economical cycles, etc. But they have a really relatively small impact on the general behavior of Bitcoin. And so we are trying to characterize more and more of Bitcoin behavior that seems to be driven by its own um, laws, its own structure. It's not external influence. Of course, we do need the network to be supported, right? After all, it's almost like there is the. And by the way, yesterday Veritasium, this very nice educational channel on YouTube that is run by a physicist like us, had an episode on power laws. They already covered power laws, like one of the topics, and it was really cool. This time they are actually mentioning explicitly the scaling properties of power law. In particular, they mention both cities and animals, like biology. And it's very beautiful, very beautifully done. So go and check it out. It's very, very interesting. But yeah, so like basically, I was trying to say that, like in an animal that scales up, if you put it in jail, in a cage, and you don't feed it properly, the growth of the animal, of a even for example the tusk of an elephant, it grows like a power law. It will not, right? It's almost like actually you can use it as a diagnostic tool. You say, oh, it should follow this law. If it follows a very precise law, growth law that people studied, and if it doesn't, something is wrong with the elephant. Like for example, you're not giving it the proper nutrition. So one of the goals of having a model like ours is exactly like that. Like so far, Bitcoin has followed this very fundamental inner behavior, and if it doesn't, that will be a diagnostic tool to say something is wrong. Something is different from before. And so Bitcoin still needs nourishment to grow, but once it has the nourishment, when it channels this nourishment in a very precise pattern. That is something fundamental. And I know we are repeating, communicating this message, trying to explain it, and it takes time for the majority of Bitcoiners to absorb it, understand it, um, process it. For us, it's almost like second nature because this is how we have been trained over the years, and we have seen these many different applications. And after a while, it becomes a way of thinking. Of course, I am also human, and I am affected by 50% correction, like everybody else. But then I switch my physicist brain and say, it's nothing, and hopefully that if this is all what you get from our presentations, that is really this long-term behavior is what matters, then it's good enough, And but at the same time, right, we want to go deeper, and so if people want to follow, we have an opportunity to do so. Anyway, yep. Okay, so let's look at some of the questions. Okay, we also show the compliment. I'm not sure if we are the best, but for
No.
sure we are.
No, some of the best were my teachers. That's
Right.
the best.
I tell you, whenever I go to physics conference, is one of the few places where I think I'm not the smartest person in a room. Okay, I know it sounds arrogant, but it's very humbling actually. when you go in that kind of environments, it's like, okay, there are people that are really clever. It's very humbling experience. Um, anyway, we are very passionate. I mean, in my case, I always say my best characteristic is being passionate about what I'm studying, and so me and Stephen are putting a lot of time. Hopefully, people appreciate, that we have people like me and Stephen that are actually want to study Bitcoin seriously, going deep, and showing how beautiful it is. Because maybe people don't associate math and physics with beauty, but they are among the most beautiful things that humans do. Okay, this one. Yeah, so it's not that there are examples. There is this article, for example, that I often quote. And by the way, again, the website eventually will have a page where, if you want to go deeper, we will have a bibliography that you can explore. But there is this very nice paper that is called Beyond Sigmoids. And it's called like this because, often they mention this S curve of adoption, right? There are different type of S curves. Usually what people mean with that is the exponential kind, where it's basically, how you have a bell curve distribution that describe the different type of adopters, right? So there are early adopters, the people that come a little bit later. Then the top of this bell curve represents when everybody adopts the technology, and then as you move towards the right of the curve, you have laggards, right? People that are late in adopting the technology, and then finally you have a guy on top of a mountain that gets his first refrigerator, right, or something like that. For many technologies, you have an adoption of that kind. And now, if you sum the total contribution, right, so you have these guys, and you sum them, what is called the integral, you get the integral of this bell curve is this S curve. It looks like an S. Because basically, when this represents the total number of people adopting the technology, this S curve, and when you reach the middle, the curve becomes vertical almost, and then it starts to flatten out, right? So it has the shape of an S. So there is an article. It's mostly Chinese scholars plus a professor in the US, and they look at real social network. Among them, for example, WeChat. And it's interesting because WeChat grows very much like Bitcoin. It has power law growth of a cube in time. So we look at two things. We look at the number of adopters, so the nodes, and how they are linked between each other. So in our case, that will be addresses and then the price, because the idea is that price is proportional to links. So in a certain sense, links is equal to the price, right? This is this idea from Metcalfe that says the value of a network is proportional to the links in the network. And among the different uh, type of networks, among the networks that we studied, we have Enron. And when I show this graph where I mentioned the different networks, we have 4 or 5 networks that we are studying. Many people, in fact, Luke, that is this guy, this influencer, I will not call him my nemesis because most of his criticism are silly, but he actually mentioned something negatively, like, oh, you say that Bitcoin is like Enron. No, in fact, that you are asking about power law that failed, that was an example of power law that failed, because all the other examples, like WeChat, very healthy network, the links are growing as a power law, the nodes are growing like power law. Why they say beyond sigmoids? Because they say, no, it's not true. The network, this S curve doesn't apply. It's a power law, because the S curve is exponential. It's a power law. The adoption is a power law. The links is a power law. The relationship between links and nodes is a power law, basically like Metcalfe law. And in all these examples, it is. Even, for example, with Enron. What did they look with Enron? Enron, they look at the internal emails as an example of a network, right? People are emailing each other. I email you, you email him, I email both of you. So I studied this, and they used it, I think, on purpose. One, because given the bankruptcy, the emails became public, and we don't often have that type of information. And two, it's a failed network, right? So they show what happens when the network fails, and you can see clearly the power law starts nice, like a nice power law, both for the nodes and the links, and then it starts to decay and then drops, right? So that is an example, for example. I was mentioning what will happen to an animal, right? There is this beautiful article which talks about the growth of tooth, nails, horns, shells, thorns. Most of the natural type of structures grow like power law. In fact, actually, interesting is and maybe can you maybe Stephen turn off your microphone, because there's some kind of a
Get some background noise.
yeah. Maybe you can mute yourself for a moment. So anyway, what happens is that there are two interacting power laws. Like one, for example, determine the growth itself, and the other one the radius of a task. And by interacting with each other, they create these beautiful structures like shells and thorns, horns. They look kind of similar, right? The tooth of an elephant follows two power laws that are interacting with each other, like the price power law, that is the interaction of two power laws. But for example, if you track radius versus time, it's a power law. And if you put the elephant in a cage, I didn't do the experiment, but I can almost assure you, and then feed it junk, it doesn't have enough calcium or whatever it makes the task, then the power law will fail. It doesn't have enough fuel. So I don't know of historical ones besides the one that I mentioned, Enron, that failed, but I'm pretty sure that one could do an experiment like that and show that this fundamental power law is not fundamental anymore when you take out the conditions. The power law it doesn't generate the food. Doesn't say, there's no oh, because I need to follow this power law, all of a sudden magically I get the materials that are needed to create the task, right? And the interesting thing that it auto-regulates itself. It could grow faster, it could grow slowly, but it grows in a very precise pattern because that is the pattern nature decided it's through evolution. That is the optimal way of growth, right? Like, for example, once you go and look at this video that I suggest you of Veritasium, they explain why metabolism, right, the mass, as you have different animals of different size, the metabolism is regulated by the mass of the animal to the 3/4. And there is a very precise reason that has to do with optimization of how you distribute blood in a 3D body. It's a very beautiful mathematical argument that has to do with fractals, it has to do with different dimensions. In fact, this is why, for example, the work that Stephen is doing, looking at different dimensionalities in the parameters of Bitcoin is useful because, for example, it turns out that it is 3/4 because when you look at how the body, the vessels in the bodies are filling the body, it's almost like you have these three-dimensional structures that are becoming four-dimensional. Almost like when you have a piece of paper and you cramp it, you have a two-dimensional object that is trying to fill a three-dimensional space. And so it's the real dimension of this crumpled ball is not 3 because there are gaps and there are empty regions, etc. But it's not 2 because now it's filling a three-dimensional space. So actually one could calculate what it is going to be a number between 2 and 3. And more crumpled it is, closer to 3 it is, right? So this is why it's actually very cool that Stephen is studying what is the dimensionality of Bitcoin. You know, if you had to explain it as a system, what is the minimum dimensionality that you need? It's a very interesting question that it can be explored even more. So yeah, I mean, I cannot really mention, say, oh, you know, there is these famous historical examples, but like there are other examples that I can give you. For example, some maybe some accretion disk around a black hole, right? It follows, let's say, a power law growth, but it needs a nearby star that gives the fuel, that gives the gas to the black hole to be created. If a star is depleted and is no more, then you will see the power law breaking at a certain point, you know? So I don't know, Stephen, do you have other examples in mind?
Yes, I mean, one that succeeded is the internet itself, which followed a power law and then it saturated and when it reached everybody. But it may reaccelerate as all the AIs come in, right, and start using it again. But for now, it is saturated.
Yeah. That is very important to understand,
right?
They don't, in a certain sense, they self-sustain because it's a self-sustaining process. Like, for example, the growth of cities, right? You have the city grows in a certain way. It has this non-linearity where you actually gain something by having more and more people in the city. Everything becomes better. The GDP is a power law, so it doesn't double with size. Actually, it becomes even bigger than if you double the size. So basically, if I remember well, it's 1.15 the power law. So if I double,
Correct.
I get you do 2 to the power of 1.15, and you get 2.21. So basically, you get 21. You double, you get a little bit more. You get 21% more out of doubling the city. So what do you think it happens in that case? Well, you get again this that city with this activity, with this well-being, with all the things that a city has to offer, is a magnet that attracts even more people, that makes it grow even more, and you get more benefits. So it kind of self-sustain, okay? Once you get this non-linearity, they tend to self-sustain. But you need people. If at a certain point there are no people around the city, they want to go in, the city stops growing, you know? So the way to think about is this, that these power laws are a sign of self-regulation. There is a pattern that this power law follows, and is very fundamental. But it doesn't mean that when it's established, it will go on forever. It's an absurd idea, right? But then what about Bitcoin? The question to ask is, is there enough fuel, right? After all, Bitcoin represents a small little percentage of a total economy, right? Once if we go by a factor of 10 in market cap, we are still just matching, for example, the market cap of gold. So the question is, do we have enough fuel in the total economy, etc., to bring Bitcoin up by a factor of 10? Yeah, I will say yes, right? Because it can very easily, it's not trivial, but very, it's reasonable that it can go to the market cap of gold. By the time it grows another factor of 10, we are going to reach 200 trillion. That is basically the total, kind of close on the order of magnitude of the total wealth in the world. Because, for example, just real estate is in the order of kind of $400 trillion, right? So, and real estate is one of the most valuable things we have in the world. So the question is, can we go up a factor of 10? Can we go a factor of 100? I think 100 is possible. At that point, we're going to reach some possible saturation levels unless the economy explodes because of AI. And the other question to ask then is the time scales involved, right? So this is why the power law is such a beautiful theory, because it gives you a framework on how to ask questions and how to think about these things, right? The other question, time scales. What are the time scales involved? We have mentioned many times to reach 1 million. So factor of 10, we are talking about 8 years. You can see that is also a reasonable time scale. If we were telling you, oh, Bitcoin is going to 1 million within the next year, it will be stupid. It tells you the right time scales. It doesn't tell you, by the way, so it's a big difference saying 8 years and 100 years. It's not going to take 100 years. It's going to take 8. And the other is about 10 millions, that is 20 years, right? So 8 years for 1 million, 20 years for 10. So very reasonable time scales, very reasonable targets. Can the power law do it? Well, it's not guaranteed, but it's possible that it goes in that direction. The right condition, under the right conditions, very likely the scaling will continue, because it's something fundamental about how Bitcoin works and how the interactions and also this process of price discovery. That eventually will be nice to have a theory that says, given these conditions, given these interactions, price discovery works in this way, right? It's proportional to the square of addresses or whatever. We don't have such a theory yet. We are working on it. We are coming up with some possible approaches, but we are not there. It's an empirical fact, and it's something that actually is almost predicted by the theory of networks, that networks should behave in this way. The price is proportional. By the way, there is another article that I mentioned in one of my latest power law presentations that I do at all, when they invite me to conferences, etc. And it's called On the Explosive Growth of Network. And they did something similar to this Chinese group. They look at many social platforms, in this case in the West, like X, Facebook, and so on. And they look, in that case, not the value of a company, but the number of sales, the marketing sales, right? Most of these platforms, their earnings come from selling advertisement, right? And their sales are power laws of a number of users. Power laws, power laws, power laws. What is interesting, when these power laws are super Metcalfe, they are above, the exponent is above 2. And they explain that because they say this happens, and it's something that I want to understand better and want to derive myself, the exponent itself tells you something about the topology of the geometry of the network. If you have two, you have a peer-to-peer exchanges. And I want to understand that better. The closest thing that I can imagine that is the case when everybody else, every node is connected to any other node. In that case, it's easy to demonstrate that the exponent is 2. And for Bitcoin, it's very close to 2. It's like 1.9, something like that. With these networks, like X, for example, of Facebook, the relationship between sales, so kind of a monetary value of a network, and of the users is bigger than 2. And they explain by saying, well, because it's not really, it's very cluster type of network, right? There is a group that is interested in dogs. There is a group that is interested in shoes. There is a group that is interested in clothes, right? So these are subgroups of this network. So this, when you have a big clustering like that, big hubs like that, the exponent changes and becomes a bigger number. I need to derive that myself. I don't know an argument to show that is true, but this is one of the claims in the paper. The fact that with Bitcoin we have an exponent of 2, it says that is a more peer-to-peer type of network. That is what Bitcoin is supposed to be. So actually, it's really cool by measuring the. It's called actually when you do links versus nodes. That graph is called a densification graph. Densification of a network. It tells you how connected the network is, and so it's actually tells you the nature of a network. And for Bitcoin is another confirmation that is what is supposed to be a peer-to-peer type of network. So it's really cool, you know. So yeah, it's a very good questions, and you know, we have the tools to put it in the right context, right? Okay. So then there is this question. Maybe you can answer, Stephen.
Yes, great question. So what do cities need? Cities need energy, they need communications, they need finance, they need transport, they need their various utilities, and they need governance. So Bitcoin has these as its component networks. Basically, you know, when you look at the cities, you look at the inputs, which are the different utilities. It could be everything from the water and the electricity and the roads and even the, you know, police forces. And then you look at the outputs, right? Which is the GDP, the number of people you educate in the colleges, the patents production, and so forth. And West finds that you get 0.85 cost for the inputs, but you get 1.15 for the outputs. So you get this benefit that's almost roughly 30%. So Bitcoin has as its substrate energy, critical, transport. Well, where does the transport come from? That's TCP. That's the transport control protocol of the internet. So that's the transport. It's got communications, which can either be across the internet or across a mesh network. We've got this mesh app that's out, you know, recently. You've got governance, you've got tripartite governance. Basically, there's a function that's executive, there's a function that's legislative, and there's a function that's judiciary, and they're sort of decentralized, like the full nodes are judiciary. And you've got metabolism, and that's what this dynamic geometry is, really. That's the metabolism. And the point here is that, like organisms, Bitcoin is self-organizing, like cells and like humans. Bitcoin is internally self-organizing. It takes in resources and it creates what it needs inside the cell or inside the organism in order to operate itself. And that's why it kind of is able to get onto this sort of parallel growth, is because of the nature of the protocols, the self-organizing nature, which depends heavily on the feedback loops. For example, the difficulty is one of the most important ones, right? And you get a transference from exponential growth to more steady power law growth. So it's all of those component networks, particularly the ones that the endogenous ones at the bottom of the first chart I showed, and the ones in the middle, things like exchanges and ETFs, and the intermediate financial networks in between us and TradFi, or the obviously the miners, the nodes, the developers. What's the land? I mean, it's like a city, right? Bitcoin is like a city, and that's why it can be long-lived. And it's got an advantage, the same scaling advantages of inputs get cheaper because you've got Moore's law working for you to make faster and faster miners. They get more and more efficient in terms of hash rate per joule input. And you find yourself at the frontier of energy. You're going after the electricity that's 3 cents, so you're capturing methane, right? You're getting subsidies from ERCOT, if you're doing load shedding. And so those are the substrate components. And the output is obviously in the price and the value, but also all of the networks that have been built in order to interoperate with Bitcoin and to use it in various ways and to hold it in various ways. Do you want to add anything?
Yeah.
Giovanni?
Yeah. I will say, you went in more details. I will have answer, but I kind of did in the comments with people, in general. So all these things are great, but in the end, a social network is made of people, right? So people, interest, resources, time, energy. It seems abstract, but social networks, this is what they are made of, right? They are made of people. And then, of course, there are rules of engagement, like all the things that Stephen was mentioning. And then, because I really love this terminology that I often adopt from Stephen, that Bitcoin is a meta network. So it's not just a social network, it's a network of the companies, right, in the ecosystems. I'm working here in Blocks, and we host several startups that are working in the space. There is an entire industry of different startups, but also the treasury companies, the banks, the ETF, all this ecosystem that is also a network, right? They interact with each other and they create information, exchange of information, goods, materials, people, energy, kind of like a city. So it's a virtual city, but is no less real than a real city. And then there is an entire network of machines, right? All the pools that are doing the mining, all the interactions that exist there. Often we forget that actually in the end, Bitcoin is a protocol, it's a software, that uses energy. So all these things interact with each other and form this network, this city. It lives, the machines are real as real they can be, and they use one of the most real things that exist in a universe, that is energy. And they deal with very physical things like heat. So they have all kind of limitations and constraints from the physical world. They kind of anchor Bitcoin to the physical world. But then there is also the entire industry that is around, that is also maybe it's more virtual, but still as real as anything else. So yeah, this is, and probably there is also dimensionality of ideas, and, because people also forget that humans are driven by ideas, by culture, So Bitcoin is also a cultural movement. It's a thinking movement. There is all kind of different substrates. Some are less real, but they don't mean, not real, but material, let's say, but they are no less real. It makes me laugh when people say, oh, it's this coin in the digital space. Like most money is in the digital space, and we are actually trying to get rid of the physical money. There are less and less banknotes circulating, or coins themselves, right? So the
Bitcoin is more
are
real than fiat.
arbitrary numbers that somebody can change on a screen. And Bitcoin is the most solid uh, record, monetary record we ever conceived. It's really ridiculous when people say certain things about Bitcoin based on ignorance. And, yesterday I was watching, this comedian, Oliver, whatever his name is, that he was discussing Bitcoin as a bad thing, so while putting it together with crypto in general, whatever. And it's obvious when people like that talk about Bitcoin, even if it's followed by millions of people, how ignorant it is. They never mention the real property of Bitcoin, that is something that is decentralized, that belongs to everybody. It makes me sad that people from the left, for example, we have a lot of resistance towards Bitcoin for ideological reasons, when actually Bitcoin is not from the left, not from the right. It transcends both of them. And, and there are a lot of things that are actually done at the social level that are good, like banking the unbanked. And so it's sad. But yeah, so Bitcoin is as real as anything else, if not more, Okay. Um, then there are more, let's say, questions based on trends and where we are in the cycle, etc. We already discussed these. I dedicated an entire presentation. Uh, we will try to explain it better in the website, where this information will be discussed in details, etc. But again, there is nothing that says we cannot go below 60%. This is one of these additional regularity that we observed, right? So if you look at what are called the residuals, that is what is left over after you take the power law trend, you see some interesting pattern that the deviation above and below the power law are skewed. The skewness is there is more data points towards the bottom. That means if there are more data points, the deviation needs to be smaller. And it turns out that the majority of these data points are within 60% of the power law itself. That is close to a factor of 2, and that is weird because the power law, it's a story about factors of 10. And again, I know it sounds stupid. Many people dismiss the power law. Some people dismiss the power law because they think, oh, basically you're telling me the price can go 10 times lower than the reference price. Like say, right now it's 130,000. You're saying that the power law will still be valid if we go to 13,000? Yes, because this is what scaling means. It's a phenomenon that involves factor of 10. Okay, we add the deviations above the power law, they were factor of 10, and the power law remain intact. It's weird and it's interesting and needs to be explored. Many times we say probably has something to do with the cost of production of Bitcoin. It's never something that we actually should be a topic of study, Stephen, because we need to figure out why there is this asymmetry, and kind of if we can find the data to kind of give a proof that this is the case. But we don't have such a proof that I am aware of. But it's a regularity. Like if you look at the distribution, it's clearly most of the data below the power law is compacted to this almost factor of 2. It's not part of a theory. Nowhere in the power law itself it says that it should be like that, right? People confuse it. It's kind of a gift. We have this gift. I don't know where it comes from, but again, the power law role in this gift is to make it clear. If we didn't have an idea of a general trend, you will not be able to see it. The power law shows this additional regularity. Once you take out the main regularity, then you see this other regularity and say where it comes from. We can characterize it. We can say, listen, rarely we spend more than few days below this 60% line. Is not a line that it cannot be violated. It has been violated even in the past. But usually it means that if we go below that, we bounce back. That is the pattern that we observed in the past. And then to answer your question, yeah, I will say it looks like a bottom. The fact, though, is if you look also in the past, we reach this bottom and then we move along the bottom because we still grow. I say to be a power law, Bitcoin needs to do power law things most of the time. I have this saying. And so what that means is even when people think we are not moving along the power law, we actually do, because what happens? We leave a reference line, we go somewhere, most of the time we go to this bottom, and then we move along the bottom, along the power law, in a parallel path to the power law. So we change it. Like I just calculated in the last month, we should have grown as close to almost 3% according to the power law, and we actually grew 5%. So we actually are going up. So it seems that we even live in this bottom. So there is some tendency to actually start to recover, right? So this is all what we can say. That is the most scientific way of describing it. People add, I see other influencers mentioning, if you look at what happened 1 year ago at this place, I don't know what they're talking about and why 1 year ago is relevant, because it's not. But okay. So yeah, this is all what probably we can say about this. Do you have anything else, Stephen, that you want to?
No, nothing to add. That's really the essence.
Okay, and the tech market analogy, yeah, there are correlations with other things, but usually they are temporary. The entire thing that we are trying to describe, that is Bitcoin, is a unique beast. It has its own pattern, it has its own long trajectory, and that is what most people should focus on. Temporarily, we can. So it seems like, Bitcoin behaves like a tech stock, just maybe temporarily, not long term. Okay. Okay, so net equation. Do you feel to answer this question? Do you understand it?
I don't know what's being asked. We're always modeling future price with the power law, and we're looking at power law plus log periodicity. With the straight power law, you just take 1 + 1 over the age, you raise that quantity to the power, which is 5.68 roughly, and you subtract 1, and that's your percentage growth per annum. And then obviously with log periodicity, it becomes a more complicated equation. I don't know what you mean by Sornette's equation, because his equation that's most publicized is his log periodic power law. That's not what we're doing here. We're not doing LPPL, and people need to understand this. We're doing PL plus LP. So we're doing power law plus log periodicity forward in time. Sornette's equation works backward in time, because what it does is it only looks at a bubble. So he's looking at these little waves within a bubble that get closer and closer together until you hit a critical time and a crash. It's not what we're doing. Our critical time is January 3rd, 2009, when everything started on the Genesis date. We go forward and our waves stretch out. They don't get closer and closer together, they stretch out. So Sornette's equation in that original form is not correct. He did do some long-term work, and so there's a simpler version of his equation that has fewer parameters, and that's what we use. And we do always model, future price. You can choose whether to just use the power law or to add the fundamental log periodic fit or to add additional harmonic. We found that the harmonic that's integral doesn't work that well. It turns out to be kind of, if you're going to do one harmonic, a non-integral does a pretty good job. We've done forward out of sample testing on that, and it seems to outperform pure power law in the 6 month to 24 to 30 month range. And I've got Substack articles on that. If you take a model like that, you look out to Q2 of 2028, the centroid's around 300,000, but the uncertainty is a factor too. That's what you always have to remember. That boosts the return in that time frame, but the uncertainty is still quite large.
And yeah, so I know that many people think cities are a bad place, because there is pollution, this and this other. But if you watch the video that I mentioned from Veritasium, they make this very strong point. It is actually one of the best places where you can be. It's you get clean water, you get. I know there are some exceptions, like some cities that are more chaotic than others. There is more crime, but even in a city like LA, there is so much that you can get from the city: better jobs. You have movie theaters, there is shows, there are conferences, etc. Most of the human activity happens in cities. It's used not to be like that, but actually, in modern times, it is like that, and it's more like that. Most of the inventions, most of the technologies develop in cities, and so on and so on. It's always a question of seeing the glass half full of half empty. Uh, they could be improved, right? Everything can be improved. Crimes also grows as a power law. Strangely enough, even negative things grow as a power law. But you have also all the other good things. So yeah, I know it sounds not a good analogy, but cities are among our best inventions. There is not yet a theory of. We know why metabolism is three quarter. We don't know why the cities grow with 1.15. And actually, if any of you wants to explore that topic, it's really cool. You will be famous if you can show from basic principles, like they did with the physiology, why they spawn. Because you see, this is how cool it is, this science of the power law, because that little exponent is almost like a fingerprint of a phenomena. We actually did this for Bitcoin, where we explained where that six come from. We did it. That is actually what Newton did with the Kepler's law. Kepler's law says the distance of a planet is proportional to the period to the 2/3, and it took 100 years until Newton came about and explained, oh, it derives from another power law. Usually when you explain these power laws, you do it by invoking other power laws. And in that case, he invoked the power law of gravity, that basically if you have an attractive force that is inversely proportional to a square of a distance, then you can derive that law that I mentioned. And you will think that, well, you explain a power law with another power law. How come it's progress? It's progress because the power law that Newton invoked is more fundamental. It's one of the main forces of nature, right? The power laws that we invoked to explain that six in price versus time are more fundamental, because one has to do with the viral growth of the network, the adoption that is, weirdly enough, the internet grew with the cube, WeChat grew up with the tube, IMDb, that is this archive of movie reviews, grew up with the cube, and many viruses spread with the cube. When a physicist sees something like that, it doesn't see a coincidence, say, well, maybe there is something fundamental. Again, it would be cool to come up with some kind of basic principle that explain this type of growth and say, okay, you will have a cube, right? I don't know of any paper like that. I look for it. Maybe one day the institute will come up with a theory of y cube. The other component is the square, that is Metcalfe law. That is a back on the envelope calculations. If you have n computers connected, all of them with each other, basically is n minus one connections, right? Because you don't connect to yourself, multiply, and each computer is n. So you have n minus one multiplied by n squared minus n. If you make a lot of nodes, like say 1,000, n squared is a million minus 1,000, that is about a million. So for n big, that n is insignificant, so basically n squared. So if you have a network where any nodes is connected to any other node, then the number of links is n squared. And then Metcalfe say, well, really the value of a network is not in the nodes, it's in how you can connect these nodes, and that should be n squared roughly. These are, we are so trained to think in that way, this roughly, because it's powerful. It allows you to do, a calculation on a little piece of paper, and then get some very powerful information without being lost in all the details. It's something that the physicists are very good at. So it's really cool that two fundamental network properties combine together, and they give the price of Bitcoin over time. Many people don't appreciate that, but it's really basically we did the work of Kepler and Newton at the same time. I know it sounds very crazy, but it's true. Yeah. So yeah, we just explained why the exponent 5.8. It's close to 6, and is the combination between the growth of the addresses, that is a proxy for users. So users roughly grow like exactly the internet adoption, the number of people that use Bitcoin is. I asked the other day, out of nothing, to Claude to verify, given your data, I didn't prompt it anything. Can you tell me if it is correct that Bitcoin power law, that the internet grew as a power law with the cube? I say roughly yes, and with this power law, you need to always to have like an origin. And one thing you can do, you can choose different origins and then say which one gives you the best fit. And it turns out it was basically when the web protocols came about, that is when the origin of the internet. You could say, well, it was born before in the labs, there were some early attempts, but in that case, there was no power law growth. It started when it became a public phenomena, when people were aware of it, started to join, and you can actually locate the origin. Of course, for Bitcoin, the natural origin is the Genesis block. It turns out that if you use that, it gives you the highest R square. It gives you the best model, the best fit. Same thing. And me and Claude were having a discussion about this. How it's so coherent, this approach, that actually gives you the as a part of a solution, it gives you the origin date. It works with Bitcoin, it works with the chat, it works with the internet. So that means there is something deep on this approach. So the growth is cube, right, for the addresses, that is similar to these other systems. And addresses is used as a rough proxy, but it works. It's a measure of activity of a network. And then if you look at the relationship between price, that is a measure of the value. Some people say market cap. It works also with market cap, but really market cap is almost a constant. We had basically 5 million Bitcoin within the first 4 years. Very quickly Bitcoin, the market cap became kind of a constant, like supply multiplied by the price. So roughly supply is constant, very quickly became constant. Now is constant. So constant time price. So price is basically a measure of value of a network. that should be proportional to the number of links. And it turns out that is exactly that, proportional to a square, exactly like Metcalfe predicted. So when you have a nested power law, right? So you have basically it goes like this. Price is proportional to Bitcoiner's square cube. So sorry, price is proportional to Bitcoin's square. Then Bitcoiners grows with the time cube. So time cube to the square is t to the 6. This is why 5.8, because it's close to 6. That is the combination of these other two power laws. This comment is about paper. So, I was telling this thing like the other day. I say, look, Bitcoin behaves exactly as, with one caveat that I will mention in a moment. The 97% behavior that is the power law is exactly the same. That is what scale invariance means. It does at whatever scale, it still behaves the same. Bitcoin behaves exactly as it was behaving when it was $1 from a scale point of view. The exception is actually that the oscillations are less wild. The bubbles are smaller, the oscillation in general are smaller. So that is the only exception. But this is a secondary phenomenon. The main phenomenon that is the overall growth has not changed. So it's not true. Paper BTC has not taken the network, because if it did, it will change the nature of a network. It's simply what happens is that is one of the things that happens as we scale. As we scale, different actors, different agents come in. Okay, we went from individual investor to small institutions to larger institutions. Now nations are starting to come in. Of course, they do things differently, right? But how they interact, the effect on the network is the same. Otherwise, we will see sign of this exponent changing, of a scaling behavior changing, and we don't see. So a physicist will go the other way around. Will say, given that the behavior has not changed, that means that these apparent differences, right? Because you will think self-custodial Bitcoin, trading Bitcoin like we did in old times, where you will go to a local bar and buy Bitcoin from some other Bitcoiner, all these things that at some level they still happen, but now the majority of the transactions involve maybe ETFs, all kind of things. They don't change the nature of the network. Otherwise, we will see sign of that, and we don't see. So we have to do the other way around. We say, given that we don't see sign of change in the network, that means all these things are basically doing the same thing that individuals were doing when Bitcoin was $1. So this is my way of thinking as a physicist. I don't know if Stephen agrees. These are superficial things. Do you agree or no, Stephen?
Well, I agree. This is a technology. And of course, you can't predict exactly how a technology will be utilized. And they're going to be different avenues.
So Einstein used to say, things need to be explained the simplest possible way, but not simple. Okay. I think the work we do most of the time, me and Stephen, is actually to explain things as simple as possible, but not simple. Because if you make it too simple, then you lose some of the information, right? But if I had to explain it the simplest possible way, that is something that I try all the time, it simply says there is some fundamental behavior of Bitcoin that is not random, right? Like most people will, in particular people that don't know Bitcoin, they will say it's a random behavior, right? It grows, maybe when it crashes, when it grows again, it crashes. There is no order, there is no organization. The power law says no, there is a very precise organization that is the simplest possible relationship, in fact. But it's a straight line. This is why we insist on this straight line, because what is simpler than a straight line, right? It means one thing is proportional to another. What needs to be understood that is where the simplicity maybe is lost, because for some people it's not that simple because they are not used to reason in that way, is that we are talking about scale. The scale of price and the scale of time is what is proportional. Okay, and so that requires a little bit of effort in understand what a scale is. And a scale is just changes of 10, right? So we are saying, forget about small changes. Look at the big picture. Focus on these big changes, right? So you have a child that is growing, right? Don't look at every little centimeters. Look at when it goes from 10 kilos, I don't know, a factor of tens maybe don't happen with the child, but look at when it changes by a factor of twos, maybe, right? It goes from 10, then to 20, then to 40 kilos, right? So look at what happens and then and see if there is an organization, if there is an order. Like, for example, those the mass of a child relates to, I don't know, how big his shoulders are or the legs are or whatever. It's some kind of proportionality. We are saying there is a very precise proportionality between the scale of price and the scale of time. When you look at in the scale point of view, then it's the simplest possible relationship. It's simply a straight line. One is proportional to the other. That is maybe what is confusing about the power law, because most people are used to think about linear things. So even if we are talking about line, is a line that is not a line. It's actually a six power, right? So if you're looking at, is this idea of being able to switch between a linear picture that will show the power law as a kind of a J curve, so like a super parabola, but then being able to understand that J curve is actually a straight line when you're looking at the logs. Logs gives you the scale, right? So if you're looking at the scale, big changes of 10, then it looks like a simple proportionality. And the consequences of that, the meaning of that, is that there is some kind of mechanism that regulates the growth of Bitcoin. It makes it kind of slow down over time, because that is another implication. It still grows very fast, but it slows down. The growth slows down. But that is actually a good thing, because Bitcoin can adapt and it can use in a most optimal way the resources. This is why um, these power laws are everywhere in nature, right? So what we are trying to say in the end is that because Bitcoin behaves in this very organized fashion, then it belongs to this category of phenomena like the growth of cities, metabolism in the animals, how language is organized in the human brain. Is something that is much more than what people think Bitcoin is. It's like some kind of universal phenomena. We are creating this organism, these phenomena that it regulates itself, right? So it's something deep. There is something deep. Many of the things that people associate intuitively, right? Bitcoiners, after dealing with Bitcoin, seeing what Bitcoin is, etc., have some kind of intuition about Bitcoin in general. Many of these intuitions are expressed by the power law. This is how significant it is, because it's almost like the mathematical expression of this intuition. Like, for example, the fact that it doesn't matter if the price corrects by a factor of two, right? We say, wow, just hodl, right? Why? Because we know that eventually the price corrects by experience, right? The power law tells you that it should not matter if it is a phenomena where these changes of 10 is what matters. If a price changes by a factor of two, it's just noise, right? The signal is these changes of factor of 10. I don't know, right? It's a lot of word, but hopefully every single thing I explain is relatively simple to understand. This is why in the end, if you really want to understand it in depth, you read a book of 540 pages, because the concept, each single concept is simple if you break it in steps, right? But the depth is big, the consequences are big, and this is why I wrote this entire book, because I want to go in the depth of the consequences. Okay. Anything to add or subtract?
Yeah. I have a simpler formulation. I'm not going to say it's fully correct or precise, but basically, the reason why it's a power law, and Giovanni told you that there are two power laws that make the price power law, right? One is the cube of the adoption, and the second is the Metcalfe's value, the square of the adoption. So let's take Metcalfe's value as a given because we know that applies to networks, for communication networks and social networks. So that's a given. That's a broad phenomena. So we need to explain the other one, which is the adoption grows as the cube of age. That is the way viruses grow. Bitcoin spreads as a mind virus. It's a meme. It's a mind virus. People do not easily adopt Bitcoin. And the reason is that you can't just understand one thing. You have to understand a lot of things. In fact, if you want to orange pill somebody, you're probably better off asking them questions about the fiat system and find out whether or not they understand the fiat system. And 99% of the time, they don't. So the way you come to Bitcoin is by understanding the deficiencies of Money 2.0 before you can get to Money 3.0, the superior technology. It spreads slowly because people only adopt it if somebody they know has already adopted and they've had a lot of close conversation with them. They don't adopt Bitcoin casually. It requires a lot of work. In fact, I would say that it requires mental quantum tunneling in order to fully grok Bitcoin.
Yeah.
And that is why it slowly spreads. Those of us who are in Bitcoin conceptually can think, well, Bitcoin should be worth $1 million already. Well, why isn't it worth $1 million already? There are 8 billion people. 7 billion are ignoring Bitcoin. 100 to 300 million have some Bitcoin, and most of those have very small amounts. So maybe 100 million have some significant amount. There are 800 million people yelling at the other 100 million saying, what are you doing? You're crazy. You're stupid for buying Bitcoin. Because those 800 million think they understand something, and they don't understand fiat. They don't understand Bitcoin. And yes, it's a mind virus. And it has to therefore spread in a viral manner where you have close communication between people that know each other. It may be companies that know each other. You know, the CEO of this company, orange pills the CEO of that company. But it doesn't happen after one conversation. And also, people don't adopt in scale. They try it out. They put in a few thousand. You know, Americans own, according to River, 42% of all the Bitcoin. And of that, you know what the average amount is? It's about $10,000. So they're not putting huge amounts of their wealth. The average wealth for Americans is in the hundreds of thousands of dollars, average wealth. So people only kind of test it out, try a little bit. Adoption has two pieces, whether you do it at all, and then at what scale you do it, how much capital you actually come in. So all of that is happening, and it's going to continue to happen, we believe, because it's superior technology, and the virus spreads, you know, amongst our community as we reach out to others. That's the network effect. And so that's a responsibility we have at the Scientific Bitcoin Institute to educate people. And I think we're not educating people first and foremost to orange pill them, to get them to adopt Bitcoin. I think more importantly is we're educating them to increase their allocation to Bitcoin if they're already in it. Because we're talking to mostly people who already are in Bitcoin and know about it. And we're giving them reasons with the power law and with log periodicity, even though the power law says that the return decreases over time, we can also show the volatility comes down over time. So you have more reasons to actually increase your allocation. And that's all kind of mean mental virus behavior. But to get started, you have to quantum tunnel through, because you've got to understand a lot of different things in order to understand Bitcoin.
I wanted to answer this question, right, about price. Now, wait. The price, okay. Determined by say. I know I can see from the comment that is kind of a satirical comment, right? A sarcastic comment. Why we focus on price? I know that there is a philosophy in some Bitcoiners say, I don't care about price. First of all, 99.9% is a lie. Okay, it's a well expressed sentiment because they say, oh, I want to be beyond the fiat system. I don't care. I measure everything in Bitcoin. These are slogans, right? They don't have any rational basis, because if Bitcoin right now, after 17 years, was $1, Bitcoin will be dead. Nobody will be interested, right? So the price itself is important because, one, if a price doesn't grow faster than inflation, Bitcoin fails. One of the reasons, the main reason, the only reason why Bitcoin won against inflation, and so it's a good edge against inflation, is that it grew 100 million times in the last 17 years. Even now that the growth is slowing down, we're talking about 100 pair in the next 20 years, okay? If it follows the power law. While inflation in 20 years, probably at most, it can go maybe factor of 2, 3, 4, but it's still nothing in comparison. It's not even an order of magnitude in comparison with 2 order of magnitude of Bitcoin, okay? So price is fundamental. It's not because we are focusing on USD, it's because we're showing Bitcoin is moving faster than USD, okay? It's beating USD, it's beating inflation. And price is just a parameter, is one of the many parameters. It's a measure, we just said, there is, it's a way of measuring value. Now, if you have a better way of measuring value, just let me know and we can try to measure that. It's a measurable, it's something that it's easy. You can go and get the data, and then you see that it follows certain regularities that show the nature of a network. So I don't get it. It's really, kind of almost childish to say these things because
Childish is a good word. Yeah.
It's because it's as a meme. So we have to distinguish the meme from knowledge, right? Memes are useful sometimes. So as a meme, you can say things like this, that I don't care about the price. Like, for example, the meme, one BTC is one BTC. Well, $1 is also $1. One, stone is one stone, right? I mean, it means nothing. I know what the Bitcoiners want to say, but if you go deep and you're trying to make a science out of this information, it's meaningless, right? It doesn't mean anything. So yes, price, it's an important parameter. It's a fundamental one, I will say. We are talking about if everything behaves like we're describing, we're talking about transcending this eventually, right? The entire idea is that if we reach 10 million, 20 million, and then Bitcoin has the same market cap than the entire wealth of the world, something critical is going to happen then, right? Because maybe there is some event like a hyper-Bitcoinization or something, right? Nations at that point will be forced to pay attention. Right now, no, because it's also telling us the scale of involvement of a different type of agents, right? So when there is a reason why ETF started to be involved at a particular point of the growth of Bitcoin, because that was the right scale, right? So yeah, exactly. So you cannot really dismiss it and say, oh, because you're focusing on price, what you're talking about is meaningless. There is something fundamentally wrong in your understanding of what Bitcoin is about.
I don't think he paid attention to the entire presentation, which is that the network projects certain things, and one of those is price.
And inflation. So inflation is only a rounding error. We already demonstrated that many times, right? Remember, Bitcoin grew 100 million times. So if I have a phenomenon that grows 100 million times and I measure inflations over the last 17 years, I don't know what it is, but let's say even a factor of 2 or 3 or 4, well, it doesn't impact Bitcoin. You can even add it and you are going to see the same power law, maybe a little, it impacts just the second digit of a slope, it doesn't change the slope fundamentally. And if you think about, if you sit down and you think about it, if inflation had an impact in how Bitcoin value is, then it will have failed. All right. The only, I repeat, the only reason why Bitcoin uh, is an inflation edge is because it's growing so much faster, yes, in USD value relatively to inflation. So it's just a rounding error. So it doesn't matter. Yes, the price is a measure of the value of Bitcoin. You can use others of what is the value, what is the impact, but price is this is how physicists think. It's a measurable. It's something that you can go and it's not something. By way, it's a direct measurable, right? It's something that it is not derived, it's not calculating directly, it's directly measured. It's like the temperature, in fact, actually even more direct, because the temperature is something that has to do with the motion of a particle, but something that you can measure directly, right? It's a number, one single number for whatever smallest unit we have, like a second, right? Every second I can assign a number to the network, and that number means something. And why we know it means something? Because exactly it's related to other things, like the addresses, for example, right? That is a measure of adoption. And it's related to hash rate. It is a measure of much energy is put in the system. So all these things support each other. In isolation, maybe they have less meaning, but when you put them together, they are parameters. So this is the way a physicist think about these. These are measurable of a system. They are parameters of a system. So yes, the value of BTC is determined by the price. What else? Like I say, I propose you, if you have a better idea of how you will measure the value, let me know, and we can analyze it and study it. Price is a direct measure of value. Yeah. Uh, okay. So yeah, thank you for your questions. I see several of them. They are kind of along the same. Um, and USD currency, right? So first of all, when you will go to our
These are
dashboard,
not questions. These are barbs. I
right?
don't see any questions. I just see somebody throwing barbs.
Right, I know. But
Yeah.
let me say something about the currency. We already demonstrated you can have power laws using euros, using on any stable currency that you want. The difference between them is irrelevant for Bitcoin. You can do it in gold, in silver, in real estate. We already done these things, so I invite you to get more familiar with our work because it's all stuff that it's in the book. We didn't publish yet.
Yeah. Next week, I'm going to show the power law in gold and talk about that and make an estimate of when we catch up to gold's market cap. You're freezing a bit right now, Giovanni.
Stephen, can you hear me? I'm back.
I can hear you. Yeah.
Yeah, good.
You're
Good.
back. You're back now.
But,
Yeah.
so, but anyway, so basically the entire idea, right, is that um, you can do it in any currency. That is, maybe one day we will publish a paper. Actually, it would be interesting to do almost like a gauge theory of Bitcoin, where we show that it doesn't matter the unit that you're using; it's always the same. So that is another indication that it doesn't matter. These things are just a unit of measures that, in comparison with Bitcoin, they are universal because. It doesn't matter if I use inches or if I use centimeters, it's the same thing. One can be translated into the others. The phenomena, the scaling phenomena, transcends the units. It doesn't matter. And so that could be an interesting paper to do. But it's mentioned in the paper, in the dashboard, when people will use our dashboard, we did it on purpose, where you can change the currency. You can show the power law using yen, in fact, even Argentinian pesos. The other day, I was talking with some other Bitcoin power law analyst, and one of them was showing that even if you take Argentinian pesos, you can draw a beautiful power law there. It's like going to have a slightly different slope, but it's a power law. It's a scaling phenomenon. If you understand the nature of it, you realize that it doesn't matter which unit you use. These are things that actually we are trying to educate people, because unfortunately, a lot of educators in the space, they did their best. They had good intentions. They tried to communicate their passion for Bitcoin, but a lot of them don't have a scientific background, right? And so they create memes, they create concepts that maybe they seem deep and interesting, but in the end, it's disinformation. So this is why I think you don't have to accept it. It maybe your understanding of Bitcoin. I mean, I always say maybe people buy Bitcoin because they like the color orange. It doesn't matter what is your motivation in the end. But I think if you want to go deep and you want to see the most coherent picture and deeper picture of Bitcoin, our approach, it's unique, and I think it's valid, right? The science in the end is what makes airplane fly. If you try anything else, witchcraft or whatever, it doesn't work. Okay? So this science is superior to any other system of knowledge, because in the end it works. Okay. What else? I think I lost some of the comment. Maybe let's answer this one. Right? We see a lot of questions. That is a good sign, guys. Over long term, should Bitcoin price spend equal months of time? Well, okay. So the reason why we have the feed that is so good, right? That is 0.97, is because that is exactly what it means. It means that line, it's an average, right? Now the average could be where we had 50% of the points above the power law and 50% below. We already discussed is not the case. What it means that yes, there is some kind of weight that comes in between, right? Because on one end, that average means 50-50, right? 50% above, 50% below, but weighted in a particular way. It's weighted by two things. One, how big the distortions are, the deviations are, and the other by how many there are. So there are more deviations below the power law that are small deviations. So when you add them up together, their total weight, it's exactly the same total weight that you have by the much larger deviation above the power law, but there are a few of them. Like, for example, the peak, you have this 10 pair deviation, but it's only one peak or very few points above the power law at that level. Then it corrects very quickly, almost exponentially. When we are below, we spend a lot of time below, and so sometimes I saw, I will not mention a name, but there is a very popular Bitcoiner influencer, that say, oh, it's not so powerful because we spend most of the time below the power law. We already mentioned that it's not part of the power law, spending more time below the power law, but actually, if the fact that it does spend a lot of time below the power law, it's a good thing. That means the deviations are not big. They need, by logic, by if you understand math, you realize that is the case. So actually, that is a good thing because that means the price is contained within a band that is very close to the power law by a factor of 2, no bigger than 2. It could be bigger because the power law allows for changes of time. So yeah, so that is the way to think about it. Okay. Yes, it's been recorded. You will find it. You can find. So we have a channel. The Scientific Coin Institute has a channel. So this is being recorded in 3 different YouTube. You have also a YouTube channel, right?
Yeah. Yes, I have a private channel and just my name, but go to the Scientific Bitcoin Institute.
So if you look for Scientific Bitcoin Institute YouTube, you will find our channel where we record and you can see the previous episodes. We are going to add more content there, but also I have my own private channel that is called Quantonomy. So you can also go there. It's a larger channel, but about 11,000 subscribers. But yeah, this is a app that allows you to restream over many different channels. So if you're interested in going back and looking at this episode, you can go. I will suggest to go to the Scientific Bitcoin Institute because we want to make the channel grow. And please subscribe, right? So sign up, subscribe, so you support the channel in that way. So you will do a great service if you do that. Okay, guys, I think we cover a lot of material. We are here for almost 2 hours now. Let's see each other. I invite you, if you have all these doubts, etc. Our intention is to bring science and logic and understanding and math to the study of Bitcoin. So we have a lot of material. Read the paper, read the book. In the end, is a good message, right? We are saying, I don't know why people don't embrace skepticism. Is great, right? It's part of being viewing the universe as a scientist, to be skeptical. We encourage skepticism, right? But if you go and look at the message that we are trying to convey, is that Bitcoin is a beautiful thing. It's a powerful, beautiful thing. And so I don't understand sometimes the resistance or the desire of dismissing what we are discussing. And believe it, whenever I was saying for a long time, the power law is a scientific topic, it will be accepted by the scientific community. Many people dismiss it, but now we publish a paper, right? It's not the end of it all. There are, in the history of science, there have been papers that have been published and then something else came out that improved or very rarely dismissed completely what was published. But the fact that we actually went through that process, it means that what we are saying, it's actually validated by our colleagues, other scientists that spend time looking at our job, our work. They actually gave us very good feedback, but also they said, kind of tune down a little bit your big assertion. We got that feedback, they say, because some of the reviewers, maybe we're not Bitcoiners, but we say this is very fascinating. It's very important contribution if this is valid because it has a lot of implications. And they even gave us very practical suggestions, do this test. Like we asked for showing co-integration is one of the failures of S2F that didn't have a co-integration. Showing co-integration between price and addresses. they understood co-integration very well because they didn't ask to do co-integration between price and time. That is nonsense. In fact, some economists that look at our early work, they say, oh, there is no co-integration between price and time. It cannot be, because time is not a variable. It's like a clock that happens in the background. It's a mysterious thing, but it's something that happens in the background that continuously grow and demonstrating there is a relationship between price and time doesn't mean there is correlation between price and time. We still calculate the correlation coefficient, but there's no correlation in that sense, like, for example, between price and addresses, right? That are independent variables. But yeah, anyway, thank you so much. A lot of questions. It was very fun today to answer all these questions. We will see each other next week again. And please subscribe to our channels and visit the site. Sign up for the free readership, right? If you go scroll down on the main website, there is something that say become a member. And so there is right now, we don't have yet the paid membership program where you will access a lot of nice perks and lectures, all kind of things. But everybody gets this very nice interactive chart that is the main power law chart, the official one, if you want to call it like that. It's free, open to everybody. Just sign up for it. And you also get access to our newsletter that we already send the first newsletter. Every 2 weeks, we will make a state of the market based on the power law and all kind of stuff like that. So all that is free. So please sign up even now. Go to scientificbitcoininstitute.org. Okay, guys, see you next week.